And finally this evening, the rand edged weaker on Wednesday, trading at 17.63 to the dollar, down 0.2%, as investors awaited local inflation expectations data and key US jobs figures. Now, markets also watching trade talks ahead of the July 9th tariff deadline. Meanwhile, inflation forecast for 2025 dropped to 3.9% in the latest survey, easing rate pressures. On the Jersey, the All Share and Top 40 indices dipped, while Resource 10 gained over 1%. Market analyst Mushima Garma tracks today's market movements.
A group of South African analysts, business people included, and trade unions have lowered their inflation expectations in a survey that was published today. And the good news is it could encourage the Reserve Bank to keep cutting those interest rates. Now, according to the Bureau for Economic Research, which actually conducts the survey on behalf of the Reserve Bank, inflation expectations dropped significantly amongst all three social groups for the period that is being surveyed. Now, bear in mind that the SARB is now targeting inflation of 3%, meaning they want to keep inflation below 3% or at 3%. And our year-on-year consumer inflation for May this year is sitting at 2.8%, which is the third month in a row it has been below 3%. And that is great news. However, on a damper note, the survey also shows that the same analysts, business people, and trade unions have become more pessimistic towards our economic growth in the country. And they expect an average growth of 0.9% this year compared to the 1.2% they had expected in the last survey. And to be honest, our economy, unfortunately, has only expanded by 0.1% in the first quarter of 2025. And it's been dragged down by poor performance in the mining and manufacturing sectors. How has the market reacted to this? The all-share index has been pretty volatile in its trade today, evidently showing mixed reactions to the survey and other stock market related factors. And the rand is still on its bullish path, remaining stronger at 17 rand 67. But the rand strength is directly related to a risk-off environment towards the dollar, meaning traders remain pessimistic towards the dollar. The SARB's next policy announcement is scheduled for the 31st of July, and we just have to wait with bated breath to see what the results for our interest rate decisions will be.